Hi guys, welcome back to today's video. And in today's video, we are going to be talking about two companies. Okay, one is Zomato, the other one is Swiggy, which are two new very companies, right, in this field that we have. Now we are going to be doing, we are going to be starting with the business model as usual. Then we will talk about the Q3FY25 numbers. We will also talk about, the expansion plan that lays ahead, who's winning the race, right? We will do the peer-to-peer comparison simultaneously while we talk about both the companies, and the final nail in the coffin, we will discuss about the valuation and we will end the video. Okay, so first thing first, okay, when I start with explaining the numbers, I will start, I will share the screen. That time we will start with sharing the screen because there are too many numbers, right? So I think it is better, not just that, if you're doing P2P, I think it's better to show it by using a screen, so you can only see the numbers side by side and make a judgment for yourself, right? So okay, anyways, let us start with the business model. What exactly does Zomato do and what exactly does Swiggy does? So Zomato, if you look at them, recently they have renamed the company as Eternal also, but it's very hard, to get that name like Eternal, because I think over the years now we've been used to telling Zomato, Zomato, Zomato. So that's the, so that's why. Anyways, now if you look at Zomato, it has four main verticals. Okay, one is unka Zomato for food delivery app, which I think most of us have an experience, with on ordering food from there. The second is Blinkit, which is their quick commerce. The third is Hyperpure, which is nothing but like a Zomato version for your restaurants, like the owners of the restaurants. Now, what I mean by the Zomato version of the owners for the owners is, let's say if I'm a restaurant owner, I would need, paneer, I would need some sabzi and all of this, right? So Hyperpure caters to these restaurants, okay? They're basically, they get this raw materials, in a wholesale, in a bulk range, and they provide it to the restaurants. So that is Hyperpure. And the fourth one, the last one, is the going out, which is recently renamed as District. That is the other part of the business. As you know, Zomato acquired this Paytm ka ticketing ka business, and now they have merged it. If you remember, earlier in the Zomato ka app, you had this, you could book this dining out ka, these reservations. You could also book this event ka ticket, to Zomaland and all of this, right? So now that has moved on to, another business vertical called as District. Okay, so these are the four main verticals of Zomato. Now, if you look at it from Swiggy, what does Swiggy does? Swiggy also has the same. The platform, the entire services that they provide is literally the same. In fact, whatever Zomato does, Zomato is a pioneer over here, and Swiggy just does a copycat version of it, right? I mean, I think since I was in college, I remember, the first food delivery platform was Zomato, and then after that Swiggy came, then Blinkit came, then Instamart came. It's always been that way, right? So if you look at Swiggy also, Swiggy, if you look at them, they have a platform. The only difference I will tell you, Zomato ka हर एक के लिए एक app है. Like Zomato को food delivery के लिए you have a separate app. Blinkit के लिए एक separate app है. You have for District, now they're going to be launching a new app, right? So these are that I would say that is the main difference over here, at least from a consumer ka perspective. Whereas in Swiggy you have everything under one app, under one platform. That is, Swiggy has its own food delivery ka business, right? That is one. The other one is Swiggy Instamart, right? The third one is they have this Swiggy Genie services. Basically, let's say if you want to send a parcel from point A to point B, right, you can use that Swiggy Genie ka services. And the last one is the most important, you can tell, is unka bhi ek dine out, ek experience hai, through which you book a reservation, you get some offers, if you're booking through that dine out ka app also. So this is basically the business model of Zomato and Swiggy. That is the most I hope there is a clarity now what is the difference between both. In fact, actually I would say there is no difference, both are similar only. I mean, same to same only. एक दूसरे का भाई बहन है, like that you can tell. ठीक है, now let's get to the fact कि like अगर आप यहाँ पे how does the demand look like for this entire this entire platform business, right, for both Zomato and Swiggy, right? If you look at it over here, the two most important verticals for them is a food delivery business, and the other one is your quick commerce, जो आपका 10-minute delivery है from Blinkit and Instamart. So these are the two main most important vertical. This is where the majority of the sale is coming from for both of them. Okay, now with the first part of the business, if you look at it, the food delivery business right now, both of the companies has given a guidance ke, like, take 20% ka CAGR leke pakdo, we can be growing at that rate. Okay, but there is a problem now with the food delivery business. Obviously, with this food delivery, right, they have done a lot of, they have completely disrupted the chain, right? Now, what I mean by disruption is, earlier when you think about food delivery, I think the one brand that comes to your head was Domino's, right? And that is what made Domino's really the winner, because they were able to, deliver pizzas to the house, which was an unknown concept earlier. But now with the advent of Zomato, the advent of Swiggy, what has happened is even a local player, right? Small players that are there, even they can get listed on the platform and they can start delivering you food, right? So because of Zomato and Swiggy, the competition for this has been, for the food delivery business has increased. As a result, what all these big brands that are there, this fast food chains, they're facing a lot of problems right now, right? So over here, but if you look at the entire food delivery business right now, as of Q3, if you see, there is a bit of slowdown in demand, muted demand. That is not, that is a good 20% for growth engine. But you see over here, right, both of these engines, they're targeting not, they're planning to double the revenues and everything, right? Growth to yahan pe immense hai, right? So how is that even though food delivery business can grow merely by 20%, how are these people focusing so much on growth? Like growth kahan se aa raha hai? The biggest game changer for both Zomato and Swiggy has been the entry into Q-commerce, right? That is a quick commerce, hum bolte hain. For Zomato, it is via Blinkit, which they did the acquisition. And for Swiggy, it is via Swiggy Instamart, right? Which they started their own platform, right? So these are the two ways. Now, this entire quick commerce, it has taken so much, there is so much demand, there is so much tailwinds, behind it. Because think about it, right? I think even if you're a user, if you think from a user's perspective, right? Think about the change in behavior that each and every one of us are witnessing. Earlier, we would always go to Kirana and buy it. Then we started going to Amazon, right? Like we used to purchase from a physical store, and then we went to Amazon, and we were used to that 2 days, 3 days delivery, kind of that, or even that same day delivery, right? And now what has happened, we've moved from that same day delivery, which Amazon used to give. Like that was a peak of deliveries that we witnessed, right? Like, oh, 1 day delivery kar raha hai Amazon. From there, from 1 day delivery, we've gone to 10 minutes ka delivery, 8 minutes to 10 minutes of delivery. And that is how, the entire shift of the landscape has changed over here for the delivery ka business. Now, this Q-commerce is where, they can say this immense tailwind, a lot of demand. And here is where the next leg of growth is going to come from. And whichever business, really is able to scale their Q-commerce, whether it is Blinkit or whether it is Instamart, whoever is able to get more customers onboarded with them, they are going to get them used to their platform. That is going to be the next winner. And if you see with both these companies, that is where the next focus is on. The focus is not much on the food delivery business. The focus is more on the quick commerce. The ultimate game for both of the companies, that is Zomato as well as Swiggy, it comes down to one thing and one thing only: who will win the 10-minute delivery car race. Okay, so I hope now we are able to understand the business model and where the direction of these two companies are going, right? From the food delivery business to they're going into this quick commerce space. Okay, so now let us understand the Q3 ka FY25 numbers. Who is doing what? How has the numbers been? And we will go into detail with every single parameter as to which are the numbers or which are the parameters that you'll have to look into. Okay, I'm sharing my screen. Yeah, I think my screen is shared. Okay, so let us go into this. Okay, yeah. Let me just, okay, anyways, never mind. Okay, so the first parameter in any companies, it doesn't matter if that company is a platform business. It doesn't matter if it is selling underwear. It doesn't matter if it is selling some FMCG product or kuch energy, renewables, whatever it is selling. The first and most important parameter is sales growth, right? And you have to see. And I believe if you guys have purchased that workshop, if you purchase the workshop that we did on Jan 11th and 12th, the investment checklist workshop, you will see how, why sales growth is the most important parameter and how we were able to connect every single parameter, whether it is in the balance sheet, whether it is in the cash flows, every single thing to one thing and one thing alone: sales growth. Okay, and if you haven't got that workshop, get it, because it is going to literally change the way you're going to look at businesses. Okay, so first we'll have to check the sales growth. Okay, if you look at the sales growth, can you see that Zomato grew by 58% on a year-on-year basis, and if you look at Swiggy, it grew by around 31% on a year-on-year basis. One thing that you can see from the first parameter itself, that Zomato is leading the race in terms of sales growth, right? In fact, the growth rate, if you look at it, is almost twice that of Swiggy. Okay, that is the first parameter. Now, the second thing is PAT growth over here. I know a lot of people will take EBITDA into consideration, and I think with this new age companies, you will see the most common term is the adjusted EBITDA that they keep using in their in their presentations, in their con call and everything. But I am not going to take it. Here is a very simple reason as to why you can be EBITDA, adjusted EBITDA and everything. You can show XYZ things. Ultimately, for a shareholder, you have to generate PAT. Because of PAT, only the EPS will grow. And unless and until the EPS doesn't grow, the shareholder will not make money. So that is why, and see, PAT is the most important thing here. Along with the sales growth, the second most important thing is PAT growth. That is why. So PAT, if you look at it over here, you see Zomato ka PAT fell by 57%. I believe it was 138 crore in last Q3. At this time, it is around 40 crores odd. And if you look at Swiggy ka losses that is there, losses has widened, right? Swiggy ka losses went from minus 574, say it has gone up to 799. Now here is one thing, if you all remember, that this Zomato had turned EBITDA positive in one of the quarters, and after that it started generating profit, right? I think most of you all would have been there during that journey, right? And the stock also went from 152 to almost 280, 300. I think it had gone, right, in that time when it became, there was a journey. First it became, EBITDA losses started coming down, and then it became EBITDA positive, and then profit started to, it started to generate. Now how is that, inka jo, how did they go, right? How did they go from, being PAT positive finally after such a long period of time, right? They became PAT positive, and again they went back, to being again a loss-making company, right? Like how did again the PAT got squeezed? Similarly, if you look at Swiggy's never been, it's never been able to generate PAT. If you look at it, it's always been a loss-making company, but at least Zomato did. So we will discuss. Remember this point, like Zomato ka ye jo, why did the losses, come, why did the PAT come down? We will again discuss it when we discuss about, it is connected to the point that I told you. Yahan pe now the entire shift, the entire demand, the entire business is changed. Entire business, it is changed from food delivery. The focus is more onto the Q-commerce. Okay. Now whenever you're talking about this platform businesses, right? Agar aap, Swiggy, Zomato, there is this another company called as First Cry. Here there is a term called as GOV, which is your gross order value. Okay. Now what is this gross order value? Let's say, for example, in Zomato, you ordered 200 rupees ka idli sambar. Okay. You ordered it. Okay. Now, after ordering 200 rupees ka idli sambar, that is the price of the product. You will have delivery charges, let's say aapka 30 rupees, platform fees 10 rupees, minus let's say you got some 60 rupees ka discount at the end of the day, and there are some GST ka charges, packing ka charges. Okay. Now after all of this, and minus the discount, all of it, the total bill value that let's say you are able to pay, you have to pay is 300 rupees. Okay. Aapka food, delivery, packages, GST, all of it minus the discount, you are paying 300 rupees to Zomato. Now here is the thing. Is Zomato going to earn all that 300 rupees that you're paying? No, right? Because a part of it will go to the restaurant, a part of it will go to the delivery partner, right? All of this is involved over here. So 300 rupees is not the final price. Or 300 rupees, the final price that you're paying, is not the complete revenue, right? It's not the complete revenue that Zomato is earning. Okay. So GOV is a total transaction that is happening. Whatever the user is paying, the total transacted amount per order, that is called your gross order value. Now, why gross order value becomes very important? Again, if you have to look at it, every every revenue is a part of GOV, right? But every GOV is not revenue. I hope you're able to make the differentiation, right? Every revenue is GOV, but every GOV is not revenue. Why? Because let's say आप 300 rupees earn कर रहे हो, right? उसमें एक part जाते हैं Zomato का fees, right? Which is Zomato, so that is their revenue, ठीक है? But वो जो सारा 300 rupees is not revenue ना, because आपको restaurant को देना पड़ता है, आपको delivery boy को देना पड़ता है, ठीक है? GST pay करना पड़ता है, all of this is there. So I hope you're able to understand the difference now between gross order value and what is the sales growth. What is the difference? Sales growth is what sales growth या revenue जो हम यहाँ पे बात कर रहे हैं, it is what Zomato earns. A part of that transaction that you pay, that is what Zomato earns, right? But GOV is a total amount per order, which includes a lot of things. Okay. Now over here, why does GOV become important? Now you understand it with any businesses, right? You will have different names for everything, but ultimately it comes down to two things: volume growth, value growth. सब एक ही है, ठीक है? Hospital में हम बोलते हैं occupancy and ARPOB. Here we will tell both of it combined together in GOV. Now why volume and value growth is why GOV is important is because think about it. When will GOV increase, right? When will gross order value increase? When let's say more number of people are coming to the platform and are using your platform. Let's say earlier there were 100 people ordering from your platform. Now 150 people are ordering from your platform. So what is your volume growth? 50% hua na. So how will GOV increase? One, more number of people has to order on your platform. The second way GOV can increase what? Let's say a user is increasing the amount of his ordering. Earlier he used to order 300 rupees worth of idli sambar. Now he's ordering ordering 1000 rupees worth of Chinese food, right? So GOV is both a factor of volume plus value growth. Okay, so GOV is nothing but a combination of volume and value growth. So can you see over here GOV on a consolidated basis? Now when I mean consolidated basis, यहाँ पे, like I told you, remember connecting to the first point we studied, business model का, which is आपका Zomato and Swiggy का business model. There are two different, right? Like उनका यहाँ पे hyper pure है, Blinkit है, you know, all of this. So if you look at consolidated GOV for Zomato, which includes food delivery, which includes आपका quick commerce, which includes आपका district car. If you look at it, for that, the GOV has grown by 57% on a year-on-year basis. Now, similarly, the GOV for Swiggy that is there, which is mainly comprising of, you know, आपका food delivery and the Swiggy Instamart, that has grown by 38%. Now, here is the thing. Now, first, okay, we will simultaneously do this. Remember how we did in that AC ka workshop? What was that? AC manufacturer workshop. We did a P2P, na? I want you to just observe this race. Okay. Remember, with any companies, right? Everything is the same. We have the same checklist. We have the same parameters. Only thing the naam thoda alag hota hai, that is it. Okay. We all know one thing is you need to have the highest sales growth. You need to be able to achieve the targets that you have set in terms of guidance, right? Not just that, you have to be the leader, which means what? You have to win the race among everybody, right? You have to come first in that sector. Now, in this sector, when we talk about it in this food delivery, quick commerce, in the listed space, we have two companies, Zomato and Swiggy, right? In that, if you look at it, first of all, if you look at Zomato, if you look at the first parameter that we saw, sales growth, who was winning the race? Zomato. The second one we need is the operating leverage. यहाँ पे operating leverage में we saw both of them are now have gone, you know, Zomato has gone back to making loss. On the other hand, even Swiggy has gone, you know, उसका losses भी widen हो गए. But see, observe one pattern over here. Who fell the least? Zomato का, you know, profit fell by 57%, but they are still a profitable company ना, अभी भी 40 crore का profit कर रहे हैं. Versus यहाँ पे Swiggy का क्या हुआ? Losses जो है, it has widened, it has become way more than what it was earlier. So again, in the second parameter, when you combine sales growth plus PAT growth, who is winning the race again? I will not tell you people. You people tell me who is winning the race between Zomato and Swiggy. Now comes the third part, right? Which is the third part, which is the volume plus value growth we talk about, which is on a which is what we call as GOV over here. Again, in GOV, can you see 57% versus 38%? Again, you tell me, combine sales growth, combine operating leverage, combine the GOV, which is nothing but your volume plus value. Who's winning the race? Zomato, yes, Swiggy. Tell it in your mind, aap bolo who is winning the race. Okay. Now, like I told you over here, there are two most important verticals for the business. One is a food delivery vertical, and the other one is your quick commerce vertical, right? Now, if you look at food delivery, the GOV for food delivery alone, right? That has, you know, yeah, that is up by 17. 1 second. Yeah, that is up by 17% on a year-on-year basis. For Swiggy here, it is up by 19.2% on a year-on-year basis. Now, if you look at on a QOQ basis, QOQ में Zomato को अगर आप देखते हो, GOV food delivery, it hardly grew by 2%. Okay, this is in spite, you know, Q3, the OND month we call October, November, December, right? This is in spite of the OND month, it hardly grew by 2% because see, in OND, which is October, November, December, we have a lot of festivities, right? So a lot of people try to order from outside and everything. You people go and dine out also more often. So in spite of that, why did, you know, it grew by 2% is because the entire food delivery system that is there, it is facing a muted growth या muted demand आप बोल सकते हो, ठीक है? Now, the other parameter, which is quick commerce. Now, what did I tell you over here? Connecting back to the first, you know, the second point where we spoke about, you know, what does the landscape of the business look like? You know, we spoke about what we saw that the trend, you know, these people are focusing more now. Zomato and Swiggy, it has become more, they're shifting their focus from being a merely food delivery platform to where the entire growth is coming from where Blinkit, and for Swiggy, it is coming from Instamart, right? Now, look at the quick commerce here on a year, or the GOV for quick commerce on a year on year. Who's winning over here? See, Zomato has grown by 120% uska GOV on a year-on-year basis, whereas Swiggy has grown by 88.1% on a year-on-year basis. Again, tell me now, combine all the four parameters: sales growth, operating leverage, GOV on a consolidated basis, GOV on a food delivery, and GOV on a quick commerce, right? who is winning the race over here, combining all the five parameters, whether it is Zomato, yeah, whether it is Swiggy. Okay. Now, the other thing, right? See, now what is happening with this quick commerce is, before I go to the next parameter, right? See, the entire here with the quick commerce is, since it is a very new idea, very new venture. Now the entire thing is like, you have to get more and more customers onboarded to your platform. The more customers come and start using the platform, the more, they're going to get used to that, right? And so the customer retention will be high over here, right? You have to get them, you have to get that customer stickiness, right? So everybody is in that phase where they're trying to onboard more and more customers, where they're trying to provide, once they onboard the customers, they're trying to provide a lot of lucrative value, trying to get better services so they can keep the customers to themselves, and they're not, probably the customer doesn't go to another app. Because with quick commerce, it is not just a competition between Zomato and Swiggy. The competition is between a lot more other places. There is Zepto on the other hand. Then there are, you will see with Flipkart, you will see with Big Basket, you will see with even Amazon, right? They have this Amazon Fresh, Amazon Daily. A lot of these people are coming with this 10-minute deliveries. Not just that, now what has happened is, you will see there are certain like high-end super local grocery chains that are there. Even these people also have started doing. So you are getting this competition, not just from the unorganized, but also from the organized space, both the ways also. Okay. Now over here, the entire thing comes down to one thing: who can grow fastest? Because the faster you grow, the more easily, the faster you grow, the more easily you can acquire the customer, the more growth you'll have. The entire thing right now is, if you look at both of them, whether you look at Instamart, whether you look at Zomato, they're telling it is one thing: yeah, I have to grow the fastest. Because Zomato already has an experience with the food delivery business, right? Over there also they witnessed the same thing. If I can grow the fastest, ultimately, later it will get reflected in my bottom line. That is what you also saw with Zomato and Swiggy, right? Like, Zomato turned profitable faster than that of Swiggy, right? Because they were growing the fastest. And that is what I think it was Dipinder Goyal, yeah, Albinder Singh, who told the same thing. Like, we have an experience running Zomato, and we have seen one thing is, the more faster I can grow, that will ultimately get reflected in my bottom line. Okay. So, yahan pe kya ho raha hai? The entire race is going to come. Ultimately, one thing is, yeah, these people are putting up so many stores. They're opening all these stores. They're trying to get volume growth left, right, and center. But the growth is coming at the cost of profitability. Now, if you want growth, what do you have to do? You have to put up more stores, right? You have to put warehouses. You have to get delivery boys and everything. Now, iske wajah se what is happening is, aapka jo bottom line that is there, it is completely getting affected. Here, the growth for both the companies, it is coming at the cost of bottom line. Now, do you understand why PAT growth is down by 57% for Zomato, right? Because here, you have to grow faster. That is the ultimate thing. Because if you don't grow faster, somebody will come and acquire your market share. Okay. For Zomato, now, along with Blinkit, they're doing Blinkit expansion, right? Because of which the losses, because of which, the EBITDA has been affected. They have recently acquired that Paytm ka ticketing business. So they're putting up a new app called District. Now, if you have to make districts successful, you have to, customer acquisition ko cost. Since it is a new app, you have to get customer onboarded over there. So District aa raha hai. And they've recently launched this 10-minute food delivery called as Bistro, just like how Zepto Cafe is doing. Now, since all three of this has come at the same time, and with Blinkit, the expansion is very, very crucial. You see, that is why you see the PAT has degrown by 57%. Similarly, the reason for Swiggy over here, Swiggy ka also, if you look at it, if you see that, the losses have widened, is because even they are doing the same thing. They also, whoever is winning the market share over here, whoever is able to do that, they will win over here. And here also, for the same reason only, because the expansion with their dark stores that we call, right, with Blinkit and Instamart, that has been at a rapid race, at a rapid time they're expanding. That is a whole reason why the PAT has, diminished for them. And the other reason why, where margins, where I believe, I don't remember which call it was, but it was, I think, in Q1 of this year, where Blinkit was supposed to turn EBITDA positive. But you see right now, right, the EBITDA margins, for Q-commerce, this is on a QOQ basis, by the way. They haven't given a year-on-year data. If you look at the EBITDA margins for quick commerce, you see last time it was Last time it was 1.3. When I tell last time, it is in quarter two. It was negative 1.3, and now can you see that it has widened the losses over here. It has widened over here. It has become minus 2.5. Similarly, can you see for Swiggy, it is at 14.8% negative versus it was negative 10.6 percentage last time. So can you see the losses for both of them over here for Zomato as well as Swiggy? It has widened. But here is a catch. Can you observe one thing over here? Zomato ka losses, in spite, I will come down to over here. Okay, I think I'll have to explain you all the store expansion to come down to that point. I'll just highlight it over here so I don't forget. Let's just okay. Now the other thing, again, we concluded the first on a consolidated basis. Like I told you, the entire game right now is with quick commerce, right? With quick commerce, first we saw the that is the GOV over here. We saw Zomato is leading. Again, we saw here EBITDA, jo adjusted EBITDA hai. Who has fallen the least over here? Zomato compared to Swiggy, right? I mean, look at it, minus 2.5 percentage versus minus 14, almost 15 percentage. Now the number of orders means what? Let's say, for example, how many people are ordering from your website. This is in terms of million. Can you see last Q3, it was 55.8 million people ordered. 55.8 million orders were ordered via Blinkit. Now this Q3, it is 110.3. It has increased by 97.6 percentage. On similarly for Swiggy, if you see, 44 million orders were there in last Q3. This time it is 73 million. It has grown by how much on a year-on-year basis? 65%. Another thing, can you observe over here? The base is bigger for Zomato compared to Swiggy, right? Blinkit versus Instamart. The base is bigger for Blinkit compared to Instamart. Now here, can you see again, in spite of this bigger base, they're able to grow faster compared to that of Swiggy. Now let's talk about average order value. Okay? Agar aap average order value bhi dekhte ho, even here also, by the way, this is in rupees, 635 rupees last Q3. This Q3, it is 707. It has increased by 11.3 percentage versus 13.8. Swiggy ka yahan pe average order value is a bit more compared to that of Zomato. Now, the other thing, if you see, number of stores opened in Q3. Okay, can you see over here? Zomato opened 216 stores in this quarter, in this Q3 alone, in one quarter. That is in October, November, and December months combined. They opened 216 stores, and the total stores as of now, as of the end of December, it was 1007. Let me tell you one thing. This entire year, they had, I think last year, by the end of the year, they had around 600 stores, and they plan to double it up to 1000 stores by March of this year. But they have already completed that in one quarter ahead itself. Similarly, Swiggy has added 96 stores, and the store target as of now, as of Q3, is 705. Okay, now store expansion plan. If you look at it, again, the Zomato mein bol rahi hu, Blinkit had a plan ki, like, first we are going to open 1000 stores by this March, and another 1000 stores by FY26, December ka 26 May we will close. Now they're telling we have preponed that plan. Instead of December 26, we will open the number of stores, that 2000 stores, a dark store ka count that is there. We are going to be doing it in December 25 only. Now, can you see over here? Tell me, why would anyone prepone your plans? Like, आप aggressively इतना expansion क्यों कर रहे हो? Because now you understand how critical the race is, right? इतना competition हो रहा है that the only way you can win is extreme volume growth over here. That is why they're doing. On the other hand, Swiggy का approach थोड़ा सा different है. If you look at Swiggy has right now, last time in Q3, they had around 1.4 million square feet. As of now, they have 2.45 million square feet, and they want to double this. They want to take it up to 4 million square feet by the end of this year, by the end of FY20, this March FY25. Now, why these people are talking in terms of square feet and not in terms of, the dark stores? Why are they not, opening more dark stores? Because unka कहना है कि, like, the existing dark store, first of all, it is underutilized. Okay, not just it is underutilized, but it is right now, in that 2000 to like 2500 ka square feet. They have two plans. One, we will add more dark stores, right? That is one thing we are going to do. And the second thing is, let's say if there are any dark stores which is, in the 2000 to 2500 square feet ka, in that range, they will expand it. They will increase the square feet over here to probably 3000 or 4000 square feet, right? In that range. So because of that, they're telling, like, don't take us into consideration in the amount of, the number of stores, but do it in terms of, the square feet. So the entire thing is, we will double the square feet in 6 months. from Q2 to Q4 in the span of 6 months, H1 से H2 अगर आप देखते हो, we will literally go from, I think that time they had around 1.96 million square feet as of end of Q2, and they wanted to take it to 4 million square feet by the end of this financial year, that is by the end of March. Okay. The only other last data I will tell you is the customer retention, because you could be, let's say you're putting up a new store and everything, etc. But let's say once, let's say your customer onboarded you, he used your platform, and then he left it and then he's gone. Like आपका तो losses वहाँ पे तो और भी बढ़ेगा ना, because you've spent so much on the acquisition cost, and if you're not able to retain a customer, then it is a complete waste. One thing over here, can you see with Blinkit is, in spite of all this competition that is coming up, right? You have Swiggy, Instamart, you have Zepto, you have Big Basket, Flipkart in 10 minutes, so many competition it is coming. Their customer retention rate is really wonderful. It is at 42%. You can go to this Zomato ka shareholder letter, they've given that graph, and you will see, right, that graph, it has been very stable in the 38 to 42% ka range, right? I think as of now, active customers are probably around 2.4 million. I think active customers are there, or that retention rate is there. Swiggy hasn't given, what has its retention rate been like. That is not available. I couldn't find it in their shareholder letter. Okay. Now, coming back to over here, can you see that I spoke about this adjusted EBITDA margins? Now you understood ki like EBITDA margins inka, which was supposed to turn at least positive. It was supposed to be a break even by this year. We saw that, and eventually be profitable. Now, because of this heightened competition, these people are doing aggressive volume growth हो रहा है, store expansion हो रहा है. As a result, इसका वजह से, you can see the losses that are there are widening for both of the company. But having said that, over here, can you see this? Zomato or Blinkit, as you see, it has a larger base over here compared to, let's say, Swiggy, right? It has much bigger base compared to Swiggy, whether it is in terms of square feet, whether it is in terms of dark stores and everything. Okay. But in spite of that, can you see, it has a larger base. It has grown faster in all metrics, but in spite of it, it has fallen the least compared to, let's say, Swiggy. Because look at here, it was 10 versus 14, like almost 5% ka, it has fallen down. Versus over here, it is hardly anything, right? Like from 1.3 to 2.5. So I think this literally shows the efficiency with which Zomato and Blinkit is able to do, or the adaptability to their platform, or the retention to their platform compared to that of Swiggy over here. Okay. Now, one thing is that is clear, right? Like inka agar aap dekhte ho, like why was I stressing over here ki, like, that the entire focus is on quick commerce? Because I remember in one of the shareholders letters, I think it was Albinder, he spoke about the Blinkit head. He spoke about, ki like, all of our, I think this was when the number of Blinkit stores were around 625 or 650. Okay. At that time, we told ki like, we are, all of our stores, like literally 80% of our stores are in, the top, are in top 6 cities. That is Delhi, Bombay, Hyderabad, Bangalore. And in that only Delhi only, all the stores, only in those, in that top, in that Delhi, Gurgaon region is where, it has been able to, reach that 80%, kind of utilization, something along those lines. And and that is where they're at least, fully penetrated in that region. Whereas in Bangalore, in Hyderabad, in Bombay also, where it is such a metropolitan city, very dense population, even there, we are not even there. We're not even there at, at the surface level also. It is still very underpenetrated. So, there is immense scope for this quick commerce, because we haven't even scratched the surface in metropolitan cities. After metropolitan, we have T2, we have T3. There is so much more, we can do over here. So now I hope you're able to understand ki like itna competition, itna demand, kahan se aa raha hai yahan pe, theek hai? So now finally, if you look at it, can you see one thing, that is compare all the points: sales growth, PAT growth, consolidated aap dekh lo. Now the new trend where we are going to, because see, going forward, quick commerce will be a huge portion of the revenue. Yahan pe, remember we told one thing in the workshop, we always look for change in product mix over here, right? If you look at over here, yahan pe product mix mein nahi bol sakti hu, but I do not know even if you consider as a channel mix, because it's not a channel also, but literally ek vertical se dusre vertical, you're going from a food delivery to quick commerce, the vertical is changing over here and changing for the better over here. So over here, can you see sales growth hai, PAT growth, you compare the GOV, compare the margins also over here, right? And along with that, compare the store expansion plan that is there. You tell me now, looking at both, who is winning the race, whether it is Zomato, yeah, whether it is Swiggy. Okay. I see over here, you can clearly see, right? Clearly see that Zomato is winning the race on literally all terms, right? Like there is not even a question, there is not even a doubt over here. Coming to the final point over here, like I understand that, growth is the most important parameter. We have to look at growth. We have to chase at growth, because top line nahi banega to bottom line kaise aayega, right? All this is there. But having said that, at what cost? I think because one thing I believe with Zomato that I think was a bit, I know, I understand it was a bit disappointing, was when they did this 10,000 crore ka QIP, 10,000 crore ka QIP they did, right? Because I believe as a shareholder, you would want your business to generate money, generate cash flows, and use that cash flows, to grow your business. And I mean, and Zomato has always grown its business, by diluting its equity, by doing its QIP. Now they have done, right, doing so. So that was a bit disappointing. But having said that, that QIP probably came as a disappointing news for a lot of investors, because, there came a question, like, when will Zomato finally see, where the expansion will happen from its own money and not from an outsider ka money, right? But that is the thing, right? If they didn't do it, probably yahan tak wo growth hi nahi aata, ye 60% ka growth hi nahi aata, theek hai? That is also there. In one way, if they don't have that money, they won't be able to expand. Agar expansion nahi kiya, to they will lose market share, and ultimately they will come to, the losses will widen for them also. And on the other hand, if they do this, again, they're still going to face a brunt of it. So that is that. I mean, there is no right or wrong over here, I would tell. Coming finally, I would say, to the valuation part, what we were discussing earlier, the growth part of it. Like, how long is this growth justified? That is a big question mark, right? Because understand, growth is everything, but ultimately for a shareholder, you would also need PAT, right? You would need the EPS growth. The visibility of EPS should be there for shareholder to make money over here. That is the thing. So here is the thing, right? One, understand that Zomato is growing faster than Swiggy, but the fact that it doesn't have an EPS growth, where the EPS growth probably we will not see. For, I think, Albinder, right? He told that, forget about, PAT, forget about, EBITDA is also being positive for the next 2 quarters, because right now it is getting as many stores up as possible. And, obviously when you get the new dark store, wo underutilized hoga. Once this expansion plan is done aggressively, we can focus more on, utilizing completely this existing dark stores that are there. Probably because of that, we will see a bit of positive and then later PAT. So for Zomato, although, it is, whatever they had promised to the shareholders, ki like hamara guidance ye hai, hum wo karenge, they're already, overdoing it. Like, they have under promised and over delivered in a way, you can tell. All the guidance which was set for FY26, they're already going to be doing it in FY25, and so forth and so on, right? So they're growing at a very faster pace, but it is coming at a cost of their profitability. It is coming at the cost of the EPS growth for shareholders. On the other hand, Swiggy, which is coming second in the race, yahan pe kya ho raha? Probably, because they're not growing as fast as Zomato, right? Because they're literally growing, Zomato is growing 2x the rate of Swiggy. So since they're not growing as fast as Zomato, you can see probably unka jo profitability hai, they could reach, I mean, there is no guarantee over here as such, but there could be a visibility to profitability earlier compared to, let's say, than that of Zomato. Maybe there could be a possibility. I'm not telling sure shot. But having said that, I mean, as an investor, again, it's a weird position. Ek to Zomato race mein jeet raha hai, par yahan pe profitability nahi hai. Par agar yahan pe, let's say, if Swiggy even comes and shows you EPS ka growth, Swiggy even comes and shows you profitability, it becomes useless over here, because you are not the fastest growing engine compared to Zomato, right? I mean, you see, right, there is pro and con for both of it. I mean, there is no way you can wrap your head around with this, both these companies. That is how it is. I mean, even if Swiggy becomes profitable, since it becomes a second player in this entire space, it will again, there is no go about it, right? And not just this, it directly points out over here, like, why is Swiggy cheaper compared to Zomato? Now can you understand? Swiggy is always going to be cheaper. Swiggy is going to have less market cap. It is going to be at a favorable favorable valuation, much better, value for shareholders. You can tell whatever it is, XYZ things, compared to Zomato, is because it is growing at a way less speed compared to that of Zomato. Now do you understand? The faster you grow, the better valuation you get. I mean, growth rate is ultimately, right? The faster you grow, the better valuation you're going to have. But having said that, over here with both this company, ultimately it is going to be, who can, along with growth, which I understand for both of them, it is very important. The next step is going to be, who is going to be able to grow the fastest and will be able to translate it to bottom line, who will be able to, EBITDA positive con zyada, who will be able to achieve it faster, who will be able to achieve the PAT faster, and, will be able to add value to the shareholders. That will be the winner. As of now, yes, obviously Zomato is leading the race, but if it can't turn profitable, if they can't see the visibility of profit, it becomes a big question mark also for investors. So no, there is no positive, no negative. I mean, like, with both, there is a thing. Zomato growth is great, but at the cost of profitability, I mean, I understand for them there is no go ultimately, right? They have to do what they have to do, because warna is rate se grow nahi karega, they will lose the market share, and anyways it is over for them. On the other hand, Swiggy is, first of all, I mean, Swiggy agar wo profitable bhi ban jata hai, it is absolutely no use, because it is growing at a way less speed than that of Zomato, right? So the market will always give it a lower valuation compared to that of Zomato. So again, I do not know how to, yeah, again, there is no good or bad with both. Ultimately it comes down to one thing: growth as well as profitability. And whoever is, I think, the next leg of, I think, until this FY26, until then, I think you will see this immense growth over here in both the spaces with respect to quick commerce in every way. And if Swiggy is able to beat, the real deal will be, can Swiggy grow at a faster rate than that of Zomato, right? As of now, it has not been able to do it ever. If it can grow at a faster rate than that of Zomato, and can do so along with profitability, it could be a great value deal. But as of now, Zomato continues to lead the race. And the next leg for Zomato, you'll have to see is, whether in 2 to 3 quarters, like Albinder told, if it can inch up to, EBITDA being positive, and then finally we can see a PAT positive over here. So that's it for both the companies. I hope you all enjoyed watching this video, and I will see you again in another video again. Until then, take care. Bye.